There's a moment that happens in a lot of American living rooms, and almost nobody talks about it. You finally come into a chunk of money, real money, the kind you waited years for, and you do the responsible thing with it. You send a big piece of it straight to your mortgage. $80,000 gone toward the house, the smartest, most grown-up move you can think of. Then next month's statement shows up, and your payment is exactly the same. Not $5 lower, not $1 lower. To the penny, the same bill you had before you handed over 80 grand. That's not a mistake. That's the system doing exactly what it was built to do. And there is a single piece of paper. It costs about $250. That does the one thing your $80,000 check couldn't. It drops your payment by hundreds of dollars a month for the rest of your loan, without changing your interest rate at all. Your bank knows about this piece of paper. They're just never going to bring it up. And by the end of this video, you'll understand the exact reason why, because it isn't a conspiracy. It's something simpler, and honestly, a little worse. 2 quick promises. I'm going to show you the responsible move that feels amazing and changes nothing. And stay to the end, because there's a version of this that lowers your payment and keeps you paying the loan off just as fast. An escape hatch most people don't even know they're allowed to build. Say you've got a $400,000 loan, 30-year fixed at 6.5%. Your payment for principal and interest is about $2,528 a month. 27 cents, if you want to be precise about it. Now fast forward 5 years. You've made 60 payments, and the balance has slowly ground its way down to around $374,000. That payment still lands every month like clockwork, and lately it feels heavier than it used to. Then the money shows up, $80,000, and you do the obvious thing. The thing everyone tells you to do. You send it to your mortgage company and you mark it Apply to Principal. And it works in a way that feels incredible. Your balance drops from $374,000 down to $294,000. You just erased years off this loan in a single afternoon. You feel like a genius. You could frame the confirmation screen. The next statement arrives, and the required payment is $2,528.27. The same number. To the penny. You just handed the bank $80,000, and your monthly life did not change by a single cent. Your money is real. It's still yours. It even shortened the loan somewhere way out in the future, but it went straight into the walls of the house, where you can't feel it and can't reach it. Your budget is exactly as tight as it was the day before. There is one form that unlocks it. One form that takes that money out of the walls and puts it back into your monthly life. Your bank can do it in an afternoon, and they will never say its name. So let me say it. It's called a recast, same loan, same rate, same lender. For a flat fee, call it around $250, your mortgage company takes your new, smaller balance, that $294,000, and respreads it over the years you have left, at the exact same interest rate. They just rerun the math on a smaller number, and the new required payment comes out to about $1,988 a month. Read that again. Your payment just fell from $2,528 to under $2,000. That's roughly $540 back in your pocket every single month for the rest of the loan, for about the price of a nice dinner. Your lump sum finally showing up where you can actually feel it. Now I have to slow all the way down, because this is the part that explains everything. Why your check did nothing and why this cheap little form does what it couldn't. Your mortgage is really 2 separate things, and they have almost nothing to do with each other. The first is the pile, the total amount you still owe. The second is the bill, the fixed payment you send in every month. Most people assume that shrinking one automatically shrinks the other. It doesn't. When you make an extra payment, you shrink the pile. But the bill was locked in the day you signed. It got calculated once for the whole life of the loan, and after that, it just runs on autopilot. You can throw money at the pile all day long. The bill sits there, frozen, exactly where your contract set it years ago. That's why the 80 grand vanished into the walls. You moved the pile, and the bill never even noticed. A recast is the only move that reaches over and rebuilds the bill around the smaller pile. It doesn't touch your rate. It doesn't touch your finish line. It just tells the loan monthly payment as if this smaller balance were the real starting point. Recalculate the which now it is. That's the whole magic. It's not a loophole. It's just the one button nobody points you to. Why nobody tells you? So why didn't your mortgage company offer this when you sent the check? Why did they cash your 80 grand and stay quiet? Here's the honest answer. The move that would lower your bill earns them almost nothing. It's a flat fee and a form. The move they'd rather sell you, a refinance, earns them thousands of dollars and pays their loan officer a commission. Nobody at the bank is going to walk you toward the cheap option that makes them no money when there's an expensive one sitting right next to it. They don't hide the recast, they just never bring it up, and so almost nobody ever asks for it by name, which is exactly why you're one of the few people who now can. The obvious objection. Right about now, your brain is jumping to the obvious question. Why not just refinance? So let's put a price tag on that, because it's ugly. A refinance means closing costs of $6,000 to $10,000, a new appraisal, a credit check, someone digging through your income and your tax returns, weeks of underwriting, and the part that should stop you cold, a refinance throws away your interest rate and hands you today's rate instead. If you're holding an older, lower rate, that's the one thing you swore you'd never give up. Paying thousands of dollars to lose the rate you love isn't a solution. It's a downgrade with paperwork. Put the two side by side and it's almost unfair. Refinance, 6 to 10 grand, a brand new loan, your rate gone forever. Recast, about $250, the same loan you already have, one form, and your rate doesn't move an inch. That's exactly why people sitting on low rates love this move. It's the only tool that lowers the bill without touching the thing they're protecting. The rules. But not every loan gets to do this, so here are the rules in plain English. First, understand what a recast actually is. It's paperwork. It is not a new loan. No appraisal, no credit check, nobody re-verifies your income. You call your servicer, the company you send your payment to, you tell them you'd like to recast, you send the lump sum, you sign a form, you pay the fee. That's the whole show. Rule 1. This is mostly a conventional loan feature. Regular Fannie Mae and Freddie Mac loans generally allow it. Government loans, FHA, VA, and USDA, generally do not. That single rule ends this video for some people. So it's the very first question to ask. Rule 2. There's a minimum. Most servicers want at least $5,000 to $10,000 going toward the principal before they'll run one. Rule 3, and hear this clearly, a recast does not change your interest rate, and it does not change your payoff date. You're on the same clock you were always on. The only thing that changes is that your required payment drops. Now here's the move I'd tell you if you were sitting across the table from me. After the recast, your required payment is $1,988. But nobody says that's all you're allowed to pay. So keep paying the old number. Keep sending the $2,528 you were already living with. Now that extra $540 goes straight at the pile every single month, which means you keep almost the exact same fast payoff you had before. Same finish line, nothing lost. But here's the part that matters. That lower payment is now your safety floor. If life gets tight, a job change, a medical bill, one rough year, you drop back down to $1,988. No phone call, no permission, no penalty. Remember, before the recast, the bank wanted the full $2,528, no matter how far ahead you'd paid. Now the worst month of your life cost you $540 less. So you've really got 3 doors. Door 1, extra principal, no recast, fastest payoff, 0 relief on your monthly bill. Door 2, recast, real monthly relief, same payoff date. Door 3, recast, then keep paying the old amount. The fast payoff and an escape hatch built right in. Same money, same house. One version of you just has options the other 2 don't. Now let me be straight with you, because a recast is a tool, not a magic trick. If your loan is FHA, VA, or USDA, this door is probably closed. Ask anyway, but don't get your hopes up. If you don't actually have a lump of cash, there's nothing to recast, and please don't drain your emergency fund to manufacture one. That cushion outranks a lower mortgage payment every day of the week, and if you're carrying credit card debt at 20+%, that money has a better job to do first. Killing your most expensive debt always comes before feeding your cheapest one. And one honest note on the math. A recast lowers your payment, but by itself, it does not make the loan cheaper. If you recast and then only ever pay the new, lower minimum, you've stretched a smaller balance across all the remaining years, and you can actually end up paying more total interest than if you just prepaid and left your payment alone. That's exactly why the pro move, recast, then keep paying the old amount, is the version worth remembering. You get the lower floor for protection and the higher payment for speed. So here's the whole thing in one breath. Throwing extra money at your principal by itself doesn't move your payment at all. A refinance costs thousands and takes your rate with it. A recast, about $250, reruns the math on your smaller balance and hands you back hundreds of dollars a month without touching your rate. And the Pro Move stacks both, the low floor for safety, the old payment for speed. But there's a bigger question hiding underneath all of this, the one the bank will definitely never ask you. Should that $80,000 have gone into the walls of the house at all? Because the same lump sum, pointed somewhere else instead of buried in the mortgage, can quietly grow into something that makes this entire conversation look small. I made a whole video on exactly what that money does if you send it to the market instead of the mortgage, the slow, boring, almost magical math of it. I'll leave it right here. See you there.